So Nvidia stock demolished earning, and the stock is up nearly 15% as I am recording, sitting at $775. And there's plenty of videos out there talking about Nvidia and how they beat in data centers and how they did that and that. But I want to say most of those videos are probably very top level overview. On this earnings episode, you're gonna learn a lot and a lot of great information that you might have missed from earnings. And we're actually going to look at 9 things. For those not familiar, my name's Jose Najarro. I spent way too much time reading about the semiconductor space and the AI market. But thanks to that, my education and work experience, I believe I have created the number one semiconductor podcast for semiconductor investors. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So again, like I mentioned at the intro of this video, we're going to not look at, hey, just the simple things that Nvidia beat earnings, destroyed guidance. We already know all that. We're going to take a closer look at 9 unique things. And Nvidia obviously is my number one position, so I'm so excited. But at the same time, there are some maybe bearish things that maybe we want to consider. Obviously, a lot of bullish. So the first thing that we're going to have to take a closer look at is just our overall software market. So during the earnings call, we did hear that this is already a $1 billion run rate, and it hit a $1 billion run rate. And Jensen actually mentioned that they're just getting started. And you might be wondering, Jose, how can this be getting started? What is the market opportunity for their software solutions? So the way they're going to continue to grow this user base and this revenue run rate from their software solutions is by continuing to improve their software stacks. They are making kind of this software stack called NVIDIA AI Enterprise. And the way they're doing it is they're saying, hey, look, we're going to continue to manage this software stack. We're going to continue to optimize it. We're going to continue to patch it. We're going to continue to tune it, to install it, to kind of make it optimized for all different types of workloads. And you can get this if you kind of pay us $4,500 per GPU per year. So I think that is insane. I mean, the amount of companies that are running hundreds, thousands, and hundreds of thousands of data center GPUs, the amount of money that they can make from these software solutions is insane. So the software market is definitely a huge growth opportunity for Nvidia, and I'm pretty sure most people miss that. All right, the next thing I want to take a closer look at is the Chinese market. And obviously, if you've been following this channel and if you looked at just the earnings preview I did a week ago, we knew that the Chinese market was going to take a substantial hit. Previously, it was roughly a quarter of data center revenue. Now, the team says that it's only mid-single digit percentage. So a huge decline, but that was expected due to United States export control regulations. And the company does mention that for the first quarter, they are expected to stay within that same range. But on the bullish side, they have mentioned that they have started shipping alternatives that don't require a license for the China market. So this is kind of a nice quick evidence and optionality that in maybe quarter 2 and quarter 3, we are going to start to see a nice pickup in data center revenue in China. And even Jensen mentioned that hopefully we can go compete for our business and do our best, and we'll see how it turns out. So some people might be wondering, hey, Jose, even though with the Chinese market, at the end of the day, isn't this company supply constraint? So will that really impact revenue? The answer is yes, because a lot of the Chinese products don't necessarily need the CoWoS capacity or that CoWoS manufacturing process that is supply constrained. If we start to see some green lights here for the Chinese market, it can be very good news for the overall company's total revenue. Now, I want to talk a little bit about margins. And margins, I think, is probably one of the biggest risks and one of the biggest bearish thesis for a lot of shareholders and a lot of bears in general, because right now the company, due to supply constraint, is able to really charge a really nice hefty price on a lot of things. And we can see gross margins have expanded to roughly non-GAAP gross margins to roughly 76.7%. Due to the strong data center mix. The other thing they mentioned is for quarter 1, this gross margin is expected to grow again and be in the high 70s as well. But the company does expect gross margins to return to the mid 70s in the following quarters and stay in that limit within the upcoming year or so. So the first thing we're seeing is we are peaking to some extent in gross margins, and usually when you peak, there's only one other way to go down, usually flat, either still flat or a small decrease. So I do believe some investors might be worried about this. Luckily, the company did mention that the reason we did see a nice growth in margins this quarter and next quarter is because there were some favorable component costs. So I'm guessing some of the components that they were using are becoming not outdated, but they're not as new as they previously were. So they're able to get the cost decreases a bit. But luckily, the company did mention that they have very strong visibility into the mid 70s gross margins for the rest of the year. But obviously, with competitive pressure maybe coming from AMD and maybe some other players, we're going to have to keep a closer eye out on margins for the upcoming quarters and some of the upcoming earnings. So something we need to be in mind of. Now, I do want to say thank you guys for the support. We hit 36,400 subs so quickly. If you haven't, make sure to hit the thumbs up, the subscribe button. I really, really do appreciate all the support. If you want to support the channel a little bit more, check out my special offer at fool.com/Jose. Now, the next topic I want to take a closer look is inference. And for those that are not familiar with inference, this is the workload that happens when you ask AI a question. After it's been trained and you ask it a question, it kind of gives you the answer. So inference is a big, big market and a big portion of AI. So right now they are saying that they are on track to release their next chip, the H200, with initial shipments in the second quarter. And they do mention that the demand is strong for the H200, as the H200 is nearly double the inference performance of the H100. So obviously that's going to scare off a lot of competition if in the next quarter this company is going to announce a way better chip for inferencing solution. The other thing that I thought was pretty interesting is they did mention that the inference part of their business has grown to estimately 40% of overall revenue. The amount of training is continuing to grow because models are getting larger and larger, and the amount of inference is increasing. So as your models get larger, right, that whenever you ask it a question, it has to search through a huge database to some extent. Not necessarily in forms of AI, but just on the top level overview, it has to search through that large database. So inference costs are also increasing. So it's something to keep in mind of. Next, we have growth. We did hear some growth opportunities, and this is something that we wanted to keep a closer eye on because last earnings call, Jensen really did give us the green light that growth can continue in calendar year of 2024 and calendar year of 2025. And I do believe he still has that green light. He does mention that the conditions are excellent for continued growth in calendar 24 to calendar 25 and beyond. So very bullish there. The second thing that they mention is the demand for Hopper remains very strong. Even though this chip is over a year old, the demand is still very strong, and they expect their next generation product to be supply constrained as demand far exceeds supply. So at the end of the day, we are still very bullish on the overall growth for Nvidia's revenue due to a supply constraint based on the amount of demand that we're seeing for AI chips. Now, another question that came out during the transcript was about over inventory. Obviously, over inventory is a big deal, and I do believe this is my biggest fear for Nvidia's valuation at the current levels. Any whiff of over inventory, in my opinion, can create a huge negative sentiment towards Nvidia's stock price. Now, if that ever happens, I have no intentions of selling, but I do believe that's when it's going to be the best buying opportunity because over inventory corrections usually last a few quarters only. But a question was, hey, how are you guys controlling to make sure you're not having any forms of over inventory correction issues in the future? And Jensen pretty much mentions that, hey, look, we have a clear view and we're very transparent with our cloud server providers. The cloud server providers like Microsoft, like Amazon, like Google are their biggest customers. So they're very, very, very transparent on the products that they're about to release, when they're going to release it, how much they're going to release. So it gives them the confidence of which products they can place and how much they can order because they already know the timing best, right? So I do believe this is going to help them with allocation and prevent, to some extent, some over inventory correction. The other thing that NVIDIA mentions is they actually have a great ecosystem. They have great ecosystems with OEMs, with ODMs, and with cloud server providers. And most other companies, they just usually have their talks with the customers, but not with the middleman, right? Or usually with the middleman and not the customers. Nvidia mentions that, hey, look, we talk to everybody, the middleman, the middleman, the customer's customer. So we really see the demand up front. And because of that, we're able to really strongly allocate and see the amount of demand we need for this overall market. And I do believe this is something that Jensen and Nvidia has done pretty well, that they partner really well with companies like Supermicro, but then they also know really well the demand from the cloud server providers as well. So it kind of completes the full circle in the demand and supply chain. Now, the next thing we're going to talk about is supply constraint. So we are seeing, and we did see revenue beat, we saw guidance beat. The main reason they beat is because supply is improving, and they expect supply to continue to improve throughout the year. Even though supply is improving, they still expect that demand will continue to be stronger than their overall supply provides. And throughout the year, and they'll do their best to continue to reduce lead times, but at the end of the day, there's still so much supply, not enough supply for the overall demand. The other thing the company mentions is obviously they're going to be supply constraint on their new products, right? It takes a long time to go from zero to a very large number in manufacturing. So their H200, their Blackwell, their Ethernet solutions, there are also going to be supply constraint just because of the way the ramping process goes. So at the end of the day, this kind of bodes well for the overall margins, and it overly bodes well for future guidance and future revenue. Now, something not included in the data center market, but the visualization, they did mention that their visualization, which is GPUs usually used on workstations, was up 11% sequentially and 105% year over year. But one thing that this could be a nice growing opportunity, as we are seeing workstations, work laptops, as the AI market continues to evolve. So we are seeing strong growth in this industry, even though it's a very small portion of the pie. Now, the final thing I want to take a closer look at is the automotive market. And when we think of the automotive market, we usually only think about their AI chips that go like the Orin, the Thor, and all the other chips that go, and Harvard solutions that go into their automotive market. But they did give us some views that they estimate the data center revenue contribution of the automotive vertical through the cloud or on premise exceeds over $1 billion last year. So the automotive market is a huge market for Nvidia's data center solution. And the main reason is all these kind of automotive companies are working with AI one way or another, trying to train algorithms, move to video transformers, and move to cameras into vehicles. So there's a lot of data being processed in vehicles right now, and they continue to see Nvidia's automotive data center demand grow significantly, which is going to be a nice amount of revenue boost in the future. I mean, think about it. Tesla mentioned that they don't have enough Nvidia chips. So if Tesla doesn't have it, imagine all the other companies that are working on some form of autonomous driving. So right now, the automotive market is also one investors should be very excited about. So those are the 9 things I think investors should really be aware of, and I'm pretty sure no other video covered it to this extent. Again, most videos out there are just talking about a top level on how earnings did amazing. Obviously, we know that. We see the stock price up over 15%. But if you want the best NVIDIA news and the best NVIDIA coverage, this is the channel. So make sure to hit the thumbs up and make sure to hit the subscribe. Take care, have a good day, and see you next time.